Contents on a flood policy are always actual cash value. Flood comes through, you lose, your client loses $40,000 worth of furniture and personal items, automatically it's actual cash value. Now, there's no additional living expenses, like a homeowner's policy. Homeowner's policy, house catches on fire, the home's deemed uninhabitable, and the family has to find alternate living situation. The homeowner's policy will pay for that. The flood policy will not. If because of mold and mildew and there's just it's a hazardous place for the family to be, the flood policy does not offer additional living expenses. So it's things that we try to make sure our clients know. Flood policy doesn't cover anything outside the footprint of the home, pools and hot tubs and porches and gazebos and decking. Your National Flood Program FEMA policy does not offer coverage for that. If it's not within the footprint of the house, it's not covered. Flood, most of you know this because you deal with real estate transactions all the time. You can't wait until the storm is brewing to go buy flood insurance. There is a mandatory 30-day wait unless there is a long close. You wouldn't believe the amount of phone calls that just with Hurricane Irene that we did, oh, I want to put that flood policy in place, or I want to put that wind policy in place. At that time, I mean, it's locked up, master lock has been sealed, the key's been thrown away until this thing moves, and so we can't do that. A couple more things. A lot of mortgage companies today, they're getting funny about everything that it takes to close a loan. I'm sure you know this better than me, but a lot of the flood policies now, the banks are requiring that the flood policy also gets close to matching the note. So the $250 max from FEMA, that may be all you can get. Well, we do offer excess flood policy. If you've got a client or whose bank's saying, hey, we have to have $400,000, $300,000 in flood coverage, then we have to put in place an excess flood policy on top of that FEMA policy. And we can do that sort of thing. And the last thing that I'll leave you with is just the topic of grandfathering a flood policy. We get calls from a lot of real estate agents and a lot of clients that say, hey, I just got this $25,000 flood quote from State Farm. What in the world? I mean, this is killing my deal. Can you help me with this? Hopefully we can. There's been several cases this year where someone, an agent or someone that works in an agent's office doesn't really understand how to grandfather these flood policies. Now, if the home was built, when it was built, if it was built in a prior flood zone than it currently is today, then we can grandfather that flood policy to the ratings of that old zone. So if the home was built in an X zone or a C zone in 1987 or 88, but now it's a VE zone, well, if we quote maximum coverage on a home that's not elevated and doesn't have proper vetting in a VE zone, you're looking at $15,000, $20,000, $25,000 for that flood insurance. But if we rate that home in an X zone or a C zone, which is the zone that it was built in, it may cost them $1,000. It may cost them $500.
Can you do that even if you don't have an elevation certificate from the year it was built? Do you have to have an elevation certificate in order for that grandfathering to be into effect?
In most cases, you do need an elevation certificate, but it does not have to be done the year it was built.
Okay.
It could be done today,
right.
And you could have a surveyor reference the map and panels of the flood policy that shows that this location used to be in an X zone. So you can spend $350 to get an elevation certificate, spend $400 on the flood policy, but you still came out ahead because it was a $15,000 quote the other way.
Well, if what you're saying is true, then